Hey everybody, great to have you here for Market and Sectors. My name is Mike Fairbourn. Well, guess what? We look at market and sectors in this class, big picture perspectives of technical indicators. We talk about economic indicators as well. And we also go into, of course, sectors and some stocks. So great to have you here. I'm joined in the chat by Cameron May. Great to have Cam here. Any questions, comments you have, folks, throw those in the chat so we can address those for you. We do have some new folks, as I can see here, in our room, and welcome to all of you. Great to have all of our usual suspects back as well. Folks, looking forward to discussing a couple of different new indicators today and really trying to get a better perspective of what we're seeing post-election rally here. Definitely want to dive into some sector analysis and take it from there. So with that, let's hit some disclosures so we can get going here. Once again, welcome to everybody. You can see here, the information here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. The paper money software application is provided for educational purposes only. Investing involves risk, including the loss of principal. Quick note here, futures and futures options trading involves substantial risk. It's not suitable for all investors, and there is a risk disclosure statement there listed as well. We will tap into maybe a few of those futures today, just as a big picture perspective as we go through it. Let's see, finally, wanted to note we got here, past performance is no guarantee of future results or excuse me, past performance is no guarantee of future results. All right, well, with that, let's dive on into it. Again, welcome all. Great to have you here. Let's go ahead and take a look at the S&P 500 index. Initially, I've got a 2-year chart up right now. Let's take off this down below here. So we got that full screen. You can see that hopefully pretty well, folks. A really good jump. Yes, highs this week, kind of a consolidation. Really, I wanted to keep the 2-year up here because we've had such an extensive rally. You can see coming off this low from last year, higher highs and higher lows, and really holding above. Let's say, for example, a longer term average, which sometimes markets will hold above. And this just can be an interesting reference point for you. The 50-period moving average, longer term, you may have heard that used. It's used in a couple of different indications, but when prices have gotten above that level, there has been a fair amount of price action that has occurred, obviously. We got above here on a potential change in trend. It was ultimately a change in trend. We rallied. Just think about it. I mean, there's a lot of price action between this point and where we are up top here, where we ran up to above this point. So, that was several months in there. We came back down recently off of November, and we simply just bounced right off that level. Right? It was interesting. We held that point. Now, sometimes we've gotten below it, but bounced back up above it. One of the key points here is that we have maintained just a series of higher lows. And with that, what do you get when you get higher lows? If you're getting higher lows, unless you're getting, let's say a triangle pattern, you're likely getting, in many cases, just higher highs, an extension of a range in the market. And that is very, very interesting. We saw that obviously with the referring to it as the Trump bump, deregulation, and reduction in potential taxes, really kind of a growth and sort of a business type environment or expansion of business. We'll see what does happen, but the markets have responded very nicely with a strong gap right there. Now, a couple of things I wanted to point out too. I like the big picture because it is quite helpful just to kind of wrap our arms around. This is that's a little bit too long. We'll go with a weekly chart, 5-year weekly, to kind of give you a sense of this. And if I throw on here a 5-year weekly chart, now looking at every week, every bar here is a representation of weeks. We can come over here and take a look at something that tends to flow pretty well with a simple moving average on a weekly chart. And that could be something along a 20 or a 30 period moving average. Can be really, really helpful just to kind of monitor the strength of the trend. And you can see it right there. The 20 period moving average, just think about this. So the 20, I want to put this up here. So the 20 moving average, it's really, I was going to put DMA, but we're really looking at weekly here. So just a 20 moving average on the weekly chart a lot of price action. Now we're really talking about significant. Now we're going all the way back to 2020 here, but breaking above that level, it can act for some of these market indices, and it has acted as an interesting sort of support level to kind of capture the upside of the trend. We're going to be talking more about the trend in just a bit. We didn't quite get a dip back to that level up here. If we fast forward to the present over here, right there, that recent pullback, we got kind of close to the 20, but we really did hold above it. There was one bar below it, and then we went immediately above it and held here. But those two can be interesting when we're looking at longer term trends, just for just a technical perspective on chart action specifically. Okay, with that too, I'm going to go back to our daily, and I wanted to highlight really something I've been talking about pretty frequently this time of year. I'll tend to go through it, and that is just seasonality. And I selected seasonality again, for those of you that are not familiar with it, up top here. It's under the style button. So click on style and just go down here into chart mode. That's our standard bar chart mode where we could just see the candles or the bars on the chart. This here is seasonality. Okay, seasonality just gives us that perspective through the full year. So this is the 12 months running over here from January to December. Many of you have not seen this. We have quite a few new folks in the group right now, so I wanted to kind of highlight this. And on average, folks, it's just on average. It's not every year, obviously. There are definitely changes, but this is on average. We are looking at the S&P 500 index over the past 5 years. I'll show you the 10 and the 20 real quick here in a second, but you'll notice over here that a lot of times we will get that dip right towards the end of November, or at least a consolidation, or excuse me, October, beginning of November. This was a unique year. It was the presidential year, and we dragged just a little bit longer, which is oftentimes the case. If you look at the last 3 presidential years, we've dragged before we've bounced up in November on all 3 of those years, going back to 2012, 2016, 2020, obviously a presidential year again here, but we're getting what appears to be, on average, we'll see it can obviously change, but on average, kind of the follow through towards the end of the year. In other words, higher towards the end of the year. Kind of, well, they've referred to it as the Santa Claus rally or a seasonal rally. Obviously, it's big for retailers and other groups as well. Other sectors would participate in that. But you can see one key thing, I think, that can really help give us some idea, at least from a technical perspective. Will we continue on higher? And then, because remember, we got to go back over here into January, February, and maybe continue up to February. This was really changed. Generally, March is one of the strongest parts of the year. You'll see that, just through last year. This is last year up top here. We're just looking at the S&P 500 daily 1 year right now. Up on top on green, and we're just comparing that to our average down below over 5 years. But a lot of times you will get this rally up in March as well. If you take out the pandemic that we saw, you'll just see generally a rally up to March and something kind of seasonal like this as well. But will we get something like this? One thing does kind of stand out, and that is clearly we did break highs. Like generally, we tend to break highs over here in November. Folks, we did that right here. And we have to say, also that the trend is up. So that could be construed as a positive as well. We're seeing other groups like gold really kind of get hit, and the dollar shows some incredible strength. But quickly, let me just show you this. I'm going to set this up as a percentage basis so you can actually just kind of track this a little bit better as I shift now into a 10-year. So there's your 10-year average. Notice it looks very, very similar to the 5-year. If I go to the 20-year, it looks very, very similar. So the only point I'm stating here is that we might have, kind of from like a governing dynamics perspective, bigger picture, we may be following a seasonal perspective, just like we've been seeing strength in the market, a break into new highs. We might be getting a follow-through rally to the end of the year, perhaps. And that's one thing you can keep an eye on if it does unfold that way. In other words, will we stay above our moving averages? Will we stay up with the trend? Things along those lines can be very quite helpful. Now, one other quick thing I wanted to note too before I move on, and let's just flip this back. It doesn't automatically flip back for me. So I'm back to percentages now. If we look at a 10-year, because I think many of you like to look at the longer term perspective where that might stand right now, trend clearly up, breaking new highs. But something like a 10-period moving average, let's just say, okay, it's going to be a black line in here. The 10 period oftentimes is better for maybe those swing trade time frames. Where are we at now? Well, let's zoom in on it and just kind of highlight it. We're clearly above that point. In fact, we gapped above right after the presidential election. There's the gap. We cleared some highs. We are holding above this 10-period moving average. You can still find quite a bit of price action that can occur if prices obviously stay above the 10-period moving average. Now, it is shorter term. It's better used in many cases for stocks, actually, but you can still see it when you see real strength in the market here. I'm talking like explosive strength with the gap and all-time high range over here as well. Quick look at the S&P 5, or excuse me, the NDX before we zoom into some of the sector analysis, and then we'll look at a new indicator as well. But there we have it on the NASDAQ 100. There is the break higher, very, very small consolidation. Folks, when you get these little pullbacks here, it's really interesting because prices have jumped up very, very high. Technology, right? The growth areas, technology specifically. Here's your pullback here. Notice how mild the price action is here. We're almost getting, I mean, we are technically, the day's not done, but we are getting, I mean, if we were to call it right now, that's kind of like a doji, right? A battle, it's kind of a tug of war between the bulls and the bears. So we're already getting a doji. There's, approximately 45 minutes left in the trading day, but even on that mild pullback, that is a very, very strong sort of indication for the possibility of a flag pattern over here. Will it occur or not? We've seen a lot of strength within those areas. So let's do this. I'm going to just take you right into our sector grid right here, and I'll go full screen so you can see that. We're looking back 6 months on every one of these sectors. And by the way, if anybody wants this, let me share. Well, let me just share it in the chat so you have it. And that way, because I think many of you don't have this, and so let's make sure you've got it. So let's just go ahead and share. We'll pull it up right now. There's that link. Yeah. And so it has all 11 sectors in the S&P 500 index. Yeah, so you've got 3 over here, 4, so 12. And then the bottom right here in the bottom right-hand corner, that is the S&P 500 index right there. And what we're just looking at here is just general strength amongst all these different sectors. What do we see, big picture, breaking out? I mean, when you have kind of a grid like this, it's so helpful. You can actually even detach something like this. For those of you that haven't seen this before, you can come up top in this action icon, the top one, and just click on detach. You'll notice what that does. It actually gives me another screen of it. And I could drag that to another monitor if I wanted to, pull that over to the right or whatever. Sometimes I generally have like maybe 3 monitors. And then you can just get a sense of, just taking you back. Where are we seeing strength in the broad markets here? What sectors might be really performing? A couple of key things to note. Look at discretionaries over here after, post-election. Explosive move higher. Let's continue on. What about info tech? This is really interesting. So info technology, information technology right there. It's like, and what we can do with these grids, we don't have to squint the whole time. That's not always that fun. You can right click on it. Down here, maximize sell. Boom. Is that better? Easier on the eyes, maybe? Look at this. So these are just the technology companies in the S&P 500 index. Okay. What do you have over here? Big picture perspective, we took out some highs right there. We took out this last range of highs. We dipped, and now we're kind of flagging and sitting right on there. Perhaps it could move up here. We definitely saw strength in the NASDAQ. So this is one way to look at it. Anytime you want to pull this back, just simply go back to the arrow up top right there. I'll point to it. Well, right there, just to the left of the left arrow. There we go. We can take a look at it. Okay. I wanted to point this out too, because sometimes we don't know if this will happen in the market, but if I just take a look at the S&P 500 index while we're at it, this is kind of the move to the upside here. Really, really light, mild consolidation. We've captured all of this price range and we're holding it over the past 3-4 days. I mean, the prior 3-4 days, a lot of strength. The past, we're just holding into that range. Really an interesting pattern that a lot of technicians might consider interesting, right? For the possibility of a flag pattern follow through, right? So you can capture this and really kind of see this all on one grid here. Now, if we happen to be overdone in the markets, and we'll look at some of the breadth indicators here in just a bit, they're actually looking pretty good. But let's just say, for example, something happens and we start to go down. Well, then what you could do is you could look over here at these areas that are traditionally defensive: staples, healthcare, sometimes the industrials, materials as well. They've all kind of gone down a little bit. Industrials have not. Still, you get some defensive plays in here, but healthcare, pharmaceuticals, right? Do you see these trend lines coming along here? These could be longer term bull flag patterns, and they too could break higher. The great thing is with a graph like this, a grid, we can come in at any given time, and just take a look at it and see if, what seems to be showing strength. When you see trends and you see patterns here on a big scale, a lot of times to get this many companies moving from a particular, in a particular group, if they're starting to break out higher, I want to take a look at InfoSystems here, the stocks here, to show you real quick how to do that. But if that were the case and we were looking at these, it would be really helpful to have eyes on them and just see if we were able to break above a level. Let me show you just one more thing to focus in on. A lot of times these kinds of moves, though, if we were to get a break, it could be tied into something fundamental, a fundamental switch. So if by chance, I'm just saying, we broke higher here, what if I wanted to say, well, I don't want to sit there and watch this all day, but I'm looking at healthcare. I could put a line through there at this level. I'm going to right click on that line and go down right here, create alert withdrawing. Right there. Now I could say over here, I've got to change this up top, crosses above, and I could just say trending higher, something like this. And then I've created an alert. And so this alert can notify me via email, via text message. The computer can make sounds, whatever you can have all three happening at the same time. But if you're away from the computer, obviously the text is really quite effective. Upper right-hand corner, if you go into setup, folks, and then just go into application settings, you want to go right to your notifications right there. Then you can put in your email address, your text, or I would say your mobile phone, and that you can have a notification when you cross above that level. Really helpful. Obviously, we could do something like that with Infotech if it starts to break up higher too. I'm talking the whole group, because if the whole group is breaking higher, we know companies within that group are breaking up too, and you can just see maybe a rising tide lift the boats, the other stocks that is, within that info technology sector. If I wanted to break this down specifically for stocks, I wanted to show many of you the tools because I don't think many of you have seen these. You are new to our broadcast. So let me just quickly show you this. Let's go over here. Then we'll hit some new indicators. But if I came over here and I wanted to just go into the stock hacker. So I'm in the scan tab, number one, main tab, stock hacker number two. Got to get into the stock hacker. We can scan in the S&P 500 specifically. We can then go over and say intersect that with an industry that we just looked at. But we're going to look at the entire sector, which is information technology. We just saw the chart of it. It had just run up, it had broken above some prior highs. It had pulled back. I'm not a genius, but a lot of technicians out there do like to look at those bull flags for the possibility of a run through. So they might want to say, hey, what stocks could be within this group? If I go over here and select this entire group, which consists of all these industries, because it was the whole sector going higher, boom, we click on it. Look how fast I can scan this, and I can just tell you how many are in there. There happen to be 67 companies within this, within information technology that are in the S&P 500. So 67 out of 500 would fit this group, and these could be very interesting ones possibly to consider, if you thought that it might be a flag pattern, just from a technical perspective. So just using technical analysis, it could be very interesting for you to look at if that's what you were seeing on the chart, or you were looking at a breakout, for example. So it's just some awesome tools in here to utilize. We have some of these columns in here that can be used as well, like 1 week performance, what's been doing best on the day. Of course, if you click on this, you can see it will arrange all of these very, very quickly, and you can have all these columns. And I've got even some fundamental columns in here as well, cash flow, etc., things like that. So it's pretty extensive. To change these columns real quick, just right click. Folks, go down to customize, knock yourself out. They're all over here. We've created a few of these, and I actually have one today I wanted to share with everybody. Let's go back to our market analysis, but we just did a quick drill down. We looked at markets, sectors, some cool tools within sectors, and then how to even drill down even further into the stocks that could be interesting in terms of a potential breakout higher. Okay, so let's get back to where we were at on the S&P 500 and talk about a few things. I'm going to pull this over here as well. Now, one thing we have seen post the election is an incredibly strong dollar. The dollar has been just on a tear, and you can see longer term. This is a weekly chart. We've come all the way back up to this range. I'm just going to start killing these Fibonacci's because we just broke through all of these suckers. This is the 50% fib, and that's the last time where we had kind of a bounce off of and we came down. Kind of a 38% too over here. This is a really long-term chart, but a huge couple of months, actually. We're not through this month. You could say about a month, month and a half, which is the bars that we're looking at here up into this range. Okay, now a lot of times this can be a key driver within the market. We came all the way up to this high here, so let's see what does happen. But we're up again as we look at the dollar. Okay, and so the dollar, is really interesting. A strong dollar will tend to often, it's inversely correlated with, say, for example, commodities. Commodities will tend to be weaker when there's a strong dollar. Okay, because a strong dollar makes commodities more expensive for other currencies outside the US. Remember gold? Gold is priced in what? Dollars. Makes it more expensive for people outside the US to buy gold when there's a stronger dollar. I put this long-term trend line in right here. We just broke that on gold. Gold has been very, very strong. We've seen some other strong securities, but really, I think the strength has been shifted now over to some of the, just the equities, really. Stocks, generally speaking, have shown they've gone basically inverse gold, or they've stayed with the dollar. Now, in addition to that, a strong dollar also represents, it can be more attractive to attractive investment for U.S. assets, right? Because a weak dollar often boosts, a weak dollar will boost commodity investments, but a stronger dollar can put light on, in many cases, we could look over here and just say like equity markets, and we are seeing strength in the dollar. Now, one of the key things why I brought the dollar up specifically, because if we start to take out these highs right here, and let me just back this up a little bit, we could be on for an extended run too. Keep in mind though, just as a side note, you might want to be looking at the dollar symbol, DX dollar sign. Sorry, dollar sign. Got to have that in there. Dollar sign DXY, also known as the Dixie. That is the dollar. Here we are. That's a 50% fib on a monthly chart, right in that range right there. So could be resistance here. Looks like we might be testing that right now and possibly slightly higher with the highs right there. So if you break out here and hold, and you possibly go higher, that could be something. But if you pull back here, then maybe gold could rebound a little bit and the market could consolidate. So a lot of times things are driven by the dollar. I just thought I'd throw that out there to you today to look at. Okay, so with that, let's go into another perspective here that I wanted to show you in terms of our market sector overview, some big picture points to note. Let's go back and look at just the S&P 500 index. Now we are using over here the McClellan oscillator. So we're looking at indications and market internals for potential strength or weakness. With the McClellan oscillator, if you go below the minus 100 and then go above the minus 70, you're looking at, according to Mr. McClellan, 2 to 3 weeks of, in this case, strength. You get the opposite if you get above 100 and go back down to below positive 70, but we didn't get that, and we got this approximately right here, probably right above that gap. So we're not 2 to 3 weeks yet. We're maybe like 1 week. So according to him, at least 2 to 3 weeks of strength, and you did see seasonality earlier. What did seasonality show us, folks? What did it show us? Strength or weakness? Remember that after November, on average, doesn't have to unfold that way, but on average, we do tend to get that strength and we are trending up. So the McClellan oscillator is giving us that positive indication. By the way, sorry, that was 2 to 3 weeks. 2 to 3 means nothing. unless you put weeks under it. There we go. The summation index right here, kind of flattening out. That all else equal is also, so we saw a positive sign here. This is kind of a positive sign as well, as long as we don't just start to take off back down. Now, this is a summation of the McClellan oscillator itself. And again, remember, it's looking at the NYSE. So it's a larger basket of stocks, advancers, decliners, doing quite well. We came up right towards the high end of our range. Now, this is kind of a breadth indicator here. Now, keep in mind that 2 to 3 weeks, I'm going to go back over here, introduce a new indicator here for you that I want to talk about from time to time, and I want to actually read through it as well as we go into this a little bit more. This is the Zweig breadth thrust indicator, and let's pull it up. I've got it over here. Okay, Zweig, and I can share this as well. Breadth indicator. Double click on that. We'll pull it down here, and before I dive into it, let me just read this with you real quick. It was developed by this individual. It is it's calculated by dividing a 10-day exponential moving average of the number of advancing issues in the market by the number of advancing plus declining issues. So it does look at the advancers and decliners out there. Basically, it measures market sentiment and identifies shifts in market momentum. Okay. The breadth thrust occurs during a 10-day period. The breadth thrust indicator rises from below, key point, below 40 to above 61.5. So it's almost a Fibonacci now, right? It has nothing to do with it, but there you go, 61.5. A thrust indicates the stock market has rapidly changed from oversold conditions to one of strength, but has yet to become overbought. According to Dr. Zweig, there have been 14 breadth thrusts since 1945. The average gain following these 14 thrusts was just under 25%. Okay, does mention that it rallies about 11 months. So keep that in mind. 24.6%, 11 months. We got one just this last year. There haven't been too many that have occurred over time. Let's add this on right now. Let's make sure it's added on, and it is added on here. And let me make sure these are bolded. Can always resave these to dark. Yeah, that's good. Just get these categories set and get everything so we can actually see it down below. Click OK. I'm going to take off the RSI and just take a look at this specifically so we can highlight this. I think they're interesting to look at when, took off the wrong one, I'm sorry. Couldn't quite see it. There's your RSI. Okay, there we go. So kill that one. And we'll take this one and put this one on. Okay. And you've always got to make them big so you can see it. Okay, so we did actually get one this year. If you can see it right here, we went below 40 right here. And remember, it's triggered when you get above 40. So it's that cross above 40. If I could put another little circle right there. We went above 40, and then you've got to clear the 61.5, and we did. We cleared it right there. Now, did it show substantial strength? You know, it actually did. In fact, if I use this right there as a guide, look at that. You actually got it. It looks like maybe just before the bounce, which was interesting, but that turned out to be a pretty solid rally thus far. How high did it run? So this is something that we could kind of be looking at and thinking about as we look at the market each and every week as we go through this. But let's measure that. So we got our indicator about right there, I think. Well, I think it might have been on that jump up right there. So a bit of a confirmation. There's our rally point right there, about 16% we've run. Now, generally, he said it will run about 11 months, closer to 25% or so. It might have been one more bar over. Anyways, we're somewhere in that range, 15, 16% we've run in the market, which is the general sort of a movement. Now, there are some that run higher and some that run less. That's just the average. He said 11 months. Well, let's count over. How far have we gone from that thrust already? So 1, 2, 3, 4, 5, 6, and some change, but we might be halfway there or close to halfway there. 11 was, I think, the number that it tended to run, but perhaps there could be 4 or 6 months or whatever the case might be more in the rally according to the Zweig breadth indicator. Okay, as long as you get that move, you see you didn't quite get it. You got close, I think, right here, very, very close, but we didn't quite get below 40. This one was obviously below 40. We can count this one. I guess maybe if you, we wanted to, we could also say this point as well, and it broke right there. But really some big moves that we're getting in those advancers and decliners, and that we could actually see on the other chart. Before I go to the other chart, let me go ahead and just share this so you do all have this. I think it could be an interesting one just to keep an eye on. It doesn't happen too often, but when it does, it could be interesting. Now, one quick note I'll state here on these indicators: they're not guaranteed for timeliness or accuracy, because they're just, they're taking information that's being fed into the platform. If that information happens to be off, well, then the indicator would be off. But we've got generally good data here. But let me just go ahead and put this into the chat so you have it. I'm just going to spell it out so you can see it. Indicator. Okay. So you can take this and then plug it in up top here into your setup. Okay. And by the way, the one thing too I will do is I will post a lot of this sort of information and this kind of feedback, and definitely encourage you to follow Cameron May CS, Mike Fairbourn CS. We'll post a lot of details about the market or just certain indications of strength or weakness we're seeing out there to kind of take a look at, amongst other things. These are some wild turkeys I saw when I was out on a bike ride recently. But with that, let's just go ahead and copy. I'll put that in the chat, folks. Love to have you follow me if you're not already. But that's the kind of information Cam and I will generally post, but encourage you to follow us if you haven't already, if you'd like to. Okay, by the way, while we're at it, bottom right-hand corner of the screen, definitely, if you're able to, just smash that subscribe button. So easy to do. Love to have you on board with us. We've got over 125,000 subscribers. And if you find something useful, helpful with this, definitely smash the like button. I personally really appreciate that. It would keep this kind of content from our group coming up just more frequently for you. I'm not sure if we had a survey today in the chat. I don't believe so. But all right, let's see. I'm going to take a look at the chat. Speaking of the chat, before we dive into a few more indicators, let's see. Any other comments from what we've discussed thus far? Oh, how to create a grid. Is there an easy way, one by one, to fill it in? Absolutely, Jerry. What you would do over here, the grid, so great question. Upper right-hand corner. So I'm just going to go right into this. So it's the box just above patterns right there. It's not really labeled, is it? You could just see the grid right there. It's just right above patterns. It wouldn't matter if you're on a PC or a Mac. Just click up here. I happen to have two windows. But what you would do right there is you can go in here and just set up like for example, there's a quad right there. That's going to give me like 4. Okay, so 4 charts. I actually have this one built for 2, but I could have more. In fact, I've sent some things out on X that have had like 6 or whatever, 9 different charts in there. One quick note on this, that you can get these set up fairly quickly. Like say, for example, if you have this down here and you wanted to look at something different. Let's say, for example, you wanted to look at the Dow Jones Industrial, $DJI. I've got it down here. You want to put the symbol in, right click, maximize that cell, pop up top, and then what you can do is if you have a style that's saved on another chart, let's say you have an RSI or a money flow, whatever the case might be, any indicators of how you want it to look, always go in style and save that style. Once you save that style, you can come over here and just go like this. Boom, there's my RSI one with my money flow. So now if I go back, I have created this here. So good question generally. We have some basic classes to kind of help with that as well. But hey, I had a little bit of time, so I wanted to just show that to you real quick. All right, well, let's move back into further discussion on market and sectors, and a couple cool things I wanted to highlight here as well. But so basically on that Zweig indicator, you can see up top, we've had some massive strength in advancers relative to decliners in the market, as you can see over here. By the way, if you guys ever wanted to see what's advancing and declining, specifically, let's say, for example, in the S&P 500 or the NYSE, this is on the NYSE, but you can come up here into the Market Watch tab, click on there, scoot on over into Visualize, and then what you want to do to the right of Visualize, really important, it's not heat map. Heat map's great. You can see the heat map of all the different performers and how they've been doing within the 100, whatever the case might be. S&P 100, NASDAQ 100, how they're doing on the day, they're green, they're positive, whatnot. But visualization off to the right, just go to Index Watch right here, and it will have the advancers and decliners on the day, but you have to select it. So go to your watch list, go to the S&P 500, boom. There you go. What's advancing? We have 302 advancers, 201 decliners, and there you have it for the S&P. But you can select other indices too. Wanted to throw that out there because you can get details on what's advancing and declining right in that spot. But some big strength here. It really did add to what we were seeing within the Zweig indicator that you guys now have. All right. Yeah, absolutely. No worries, Jerry. All right. Appreciate it, Cam. Answers questions. Look at the S&P 500 equal weight. Now, as we just saw over here, each of the companies in the S&P 500, if I go back to this under the heat map, look at the sizes. They do impact the movement of the S&P 500 differently. I mean, and you can see some of these big blocks, you know, some of the Magnificent Seven, as they say, get NVIDIA, Microsoft, Apple, Amazon, Alphabet over there as well. If we equal weight all those, we can also see over here that even if all those little boxes were all the same, we're seeing strength across the board here, and it's holding up very, very nicely. So that is a positive for a breadth indication as well. So we've talked about that in the past, folks, but there it is again. Okay, so the Hindenburg Omen, as you can see down here, looking at the NYSE specifically, we have not gotten any Omen spikes, which represents a divergence between the 52-week new lows and 52-week new highs in the market. If I were to check this out on a weekly chart, nothing. In other words, we've been getting just more strength across the board in terms of just these companies that have been performing better, right? Relative making new highs versus relative new lows. You can see how that weakness over here can impact companies, I should say, can impact indices when the market is going down. You're getting a lot of new lows, and that can kind of create a break in the market and really assist with the downward trend. That's something we'll look at in this class for any indications of that from time to time, obviously, as it does come up. But that's a quick note on that. Here is, let's get back to it's on a 2-year. There we go. There was our spike in terms of new highs in the market. We did clear a level here above our 250 range. And you'll notice that with the spikes, in other words, NYSE new highs hitting, just recently 453 new highs. If that was a new high, clearly over the past 2 years, but with these spikes, it can help to facilitate the trend of the market. Put it in a different color. It's in purple here, looking at the NYSE behind the scenes. So new highs, a larger number of new highs, at least above 250, can also help to give the market a boost. So we're seeing just tons of strength really across the board here. We looked at seasonality already. There is the S&P 500 index. I want to do a quick note, a quick look at another comparison here that we have with the market forecast just below it, and show you that we are in that strong range. So the market forecast using an intermediate term line only. It's a long word, folks. I'll just put I for short. Intermediate. I'd be writing that out for a while there, but if you do hold above the 80 level, let's put a different color in. Everything's blue right there. It doesn't matter the direction of this line. You tend to get a lot of strength in the market. Key point, look over here with me. See this? Strength over here in the market. A lot of strength. We held basically above, very close to above that, 75, 80 level that whole time. Didn't matter the direction of the line. We were holding above that point, and that too can be a very interesting indication of price strength. A lot of price gains over there too, as we were holding above, let's say, the 50-period moving average that we looked at earlier. So a couple of indications that give us a cross indication too of potential strength in the market that we could look at. Over here, so we look at this. There is a look right now at the volume profile. Now we're looking at a 1 year, and a lot of our price action happened, in the earlier stages of the year. So what I want to do is go into a 3-month time frame, and there's a 6-month. Oh, that'll be okay. The 6-month time frame right here. Actually, you know what? No, I'm going to go into a 3-month because we are making new highs. And what this does for us is it tells us where the majority of volume came in at over those last 3 months in terms of prices. And you can see right here, big spike right there at this level. And, these spikes can represent what they represent as volume nodes, and it depends on where we're at in the market. You can kind of see we're at one right now. There's actually been quite a bit of volume here, which lets me know that we've seen something really interesting occur. We probably had a fair number of buyers, buy side, and sellers in here. But if you look at it, prices have consolidated very, very lightly. Let me just erase just that line right there. Can you see that line right there? We've just consolidated right there. I just drew over it again, but that's just a tendency to do. But there's the consolidation right there. Now, with that, there's been a lot of buying, a lot of selling. But let me ask you this. If prices go flat there, what do you think we have? Do you think we might have possibly, I'm going to put in a plus sign, a higher number of buyers, a bigger plus relative to a smaller number of sellers? In other words, there could also be some accumulation occurring at this higher price range too. That might be an interesting indication to kind of keep an eye on. That's just a big spike over just a few days. Generally, I mean, there might be a long period of time, a lot of trading through here that would create something like this. So, well, folks, a couple of key things to keep in mind there as we go through this. And then again, here's our longer term chart. Really quite long. I'm on a weekly chart here with a 13-month moving average. We've talked about this. We bounced off that 13-month that we've been looking at, which can be an interesting indication. And there is your bounce right there. Also, the MACD crossover has just occurred on a weekly 2-line right there. This is really helpful for individual stocks. The MACD crossover line for those people that are looking for indications of momentum. So sometimes they'll use that too as a momentum indication. And it can be helpful to see, let's say, for example, when the 12 period moving average is moving above the 26. I've got an indication of that, or I should say over here, a column that can help you read that as well. Let me just pull that up right now. Make sure you have that, but that can be useful. Let's see, the 2-line, it's the one I created, the crossover right there. Okay, so I'll pull this up, and we'll just create this column right now. And this just means there was a crossover in the stock over the last 3 days. And you can double click on that. It will give you, it'll highlight. It'll give you a 1 if it did occur, or a red if it didn't. So let me just go ahead and save or share this right now. For those of you that are reviewing this after the fact, I'll put it in the description section under more, under YouTube as you're viewing that. But I'll share this with you right now. So this is the MACD crossover. Again, the scripts aren't guaranteed for timeliness or accuracy, but it will take the data that's being fed into them. All right, folks. Well, that was a lot of information. I actually added, we're a little bit busier today because I realized there were just a lot of individuals that we had here today, and I wanted to just kind of backfill a lot of the information that we generally talk about in this class from week to week that you might not have been familiar with, and some of just the great tools on thinkorswim. So glad we were able to get through some of those with you. Again, if you're able to, smash that subscribe button, definitely hit the like if you are liking it, but we'll plan on doing this each and every week. I'll keep an eye out too for any topic requests that you might have thrown into these notes down below as well. But with that, wish you a fantastic rest of the day. See you next time all.